are the only two things that you need to know to be profitable in the trading industry, guys. When you know these two things, your trading career has changed automatically. Welcome to our today's episode. Today we'll be talking about what liquidity and inducement. This is a very huge topic. A lot of people have been asking, what is liquidity? What is inducement? How do I spot liquidity on the chart? How do I spot inducement on the chart? All right, so today's I will take you through, guys, how to spot liquidity in the chart and how to spot what inducement in the chart. It is very simple. You just need to do what? Relax your mind. Okay, so if today is your first time of coming across my video, please do well to subscribe and turn on the notification bell so that you stay active whenever I post content such as this. All right, now let's go into what we have today. Liquidity. What is liquidity? When you hear the word liquidity, what comes into your mind? Liquidity is simply what? Money. Liquidity is what? Money. All right, it's not a big word, it's just what? Money. Liquidity simply means what? Money. So in the chart, a lot of retail traders, whenever they spot a good setup, they say, okay, this is where I want to buy, and they start stacking what? Orders. Okay, those their stop loss that they are placing there is what? Money. It is what? Liquidity. It's as simple as that. Liquidity is what? Money. And then what is inducement? Inducement is what? Trap. Simple. Inducement is what? Trap. When I mean trap, in the chart, you know, the big players, the central bank, for example, these people, they are the big boys. They have a lot of money, all right, to move the market. If they want to trade, they are trading something like, we're talking about $1 million, $1 billion, okay? They have a lot of money that whenever they enter the trade, you can see their footprint. Okay, you see huge candles printing with displacement, creating fair value gaps. You see that what the people that are involved in this trade are what? The big boys, the central bank, the ways, you know, hedge funds. There are a lot of names. People call them a lot of names, but just know that it is what? Set of people or group of people that have entered the market with huge capital. Okay, so that is that. Now for these people to enter the market with huge capital, there need to be what? Exchange. Like if they are buying, there should be what? Sellers. Okay, there is no buying without a what? A seller. So the two must what? Balance. So these people that has this big amount of money, if they want to buy, for example, a Bitcoin worth $1 billion, they want to sell it to somebody, right? So who are these sellers? There is no single seller that want to exchange that kind of amount of money or Bitcoin. There is no retail trader that has such, you know, such worth of Bitcoin. Okay, so what the bank does is they try to manipulate. Why are they manipulating? They want to create the chart in such a way that millions of retail traders will see that as a very good opportunity to buy, and they will be placing their stop losses. Okay, imagine when 10 billion people place their stop loss at one point, the money becomes big and becomes equivalent to what the banks have to exchange. I don't know if you get the point. That is why inducement must be there, liquidity must be there. It is the two of them what moves together. There must be liquidity, there must be what? Inducement. Inducement is simply what? The trap. The trap is like in the chart, the pattern you see. All right, the chart pattern you see, and it is very beautiful, very clean, and that pattern convinces you enough that yes, I think this is the right trade, this is the right setup for me to take, this is the right setup for me to trade. Even if maybe God come from heaven and tell you, my son, don't take this trade, you say no, this is what the right trade to take, because everything appears clean, very beautiful. You pack your money, so you put it there. You don't know that what you're seeing is what? Inducement. It's a trap. And not only you that is seeing that thing, a lot of retail traders like you are seeing that beautiful setup, and they are stacking their money, and they create the stop loss. Stop loss become what? $1 billion. So that is not enough for the bank to trade with, and then they exchange, buy and sell, take their profit and go their way. That is what? Inducement. Now, how can you spot inducement in the chart, and how can you spot liquidity in the chart? That is the problem, and this topic alone has given a lot of traders difficulties in taking the right trade, you see most of them are losing money, blowing account and all of that. But by the time you understand liquidity and inducement and you're able to spot it, you're what? A smart trader. You are what? A smart trader. And that alone can help you what? Gain a lot of profit. You make money, and you can even help a lot of people, open people's eyes. It's like eye opening. The first time I understood what inducement is, I was shocked. Guys, I was shocked. I was like, really? What have I been doing since? What have I been doing since? You need to understand what the concept of liquidity and inducement. When you understand that with market structure, bro, you're good to go. So that is that about what? Liquidity, and this is that about what? Inducement. Now let us look at the structure. Okay, let us look at the structure, how it appears on the chart. Now let's use the bullish market for example. Okay, now the market moves like this: break to the upside, break to the upside, break to the upside. Now this is our break of structures, break of structures, break of structures to the upside. Now this is how the market moves. Okay, now I told you in our previous class, I told you about demand levels or demand zone, which we can spot around this area. Okay, so this is a demand zone. It broke structure, so we are expecting price to come back to this area so that we can look for what? Opportunity to buy the market back up. All right, now this thing I'm explaining to you, this is what everybody is thinking. Okay, and smart money, that is the banks, they know that a lot of people are also waiting at this demand level to buy. You understand? That is why confirmation is very very what? Important, when to confirm if actually that zone is gonna hold, because sometimes this zone can be used as what? Inducement or liquidity by the big players, that is the banks. So you have to be very smart to understand whether this zone is gonna hold or not. There are a lot of confirmations I will teach you when it comes to taking trade. All right, that is in the chart, in the live chart. So now this zone is what? A demand zone, and we're expecting that price comes back to this area. We look for opportunity and then we'll buy the market up. All right, so while we are waiting here, the big boys understand that a lot of traders know that this place is what? Demand level, and they are trying to buy here, and their stop loss are below this area. Their stop loss, let's use dollar to represent it. Their stop loss are below what? This area. When you take trade here, you place your stop loss below and you want to target what? The high. That is the draw on liquidity. Okay, so you place your stop loss here. The banks knows. So if you do not have enough confirmation to actually know whether this zone is going to hold before you place your trade and place your stop loss, if you do not have the confirmation, you end up becoming what? The liquidity. All right, now this area is now what? Full of money, people stop loss. Now if price comes back and sweep it like this and you validate it, it sweeps people's money. It has done what? It has used this position as what? Liquidity pool. All right, you see that after sweeping, in most cases after sweeping, price what? Reacts from here and goes up. And when you check, you see that it is reacting in the next demand level, meaning that it used the first zone as what? Liquidity. This is what? Common sense. You see, when you're trading, you need to be very smart. Okay, that's why you trade like the banks. That is smart money. Okay, you trade like the bank. You need to be very smart. You understand what? Where liquidity is and where inducement is. Inducement is just the trap. Now this is what I just explained: liquidity, meaning that this zone is what? Liquidity that was taken for price to exchange the buy or the sell order with the buy. Okay, price exchange the sell. All this place, price exchange. Smart money wanted to buy in this market actually, but they use this zone as liquidity to exchange what? Their sell for what? Buy. That is just what happened. So you need to understand when a zone is a liquidity pool and you avoid it. But you cannot actually really know just by looking at this, except you understand what your confirmation pattern is. That is why confirmation is very important. You don't just buy in every zone you see. I told you before, you don't buy in every zone. You have to, when price comes to your zone, you have to look for specific confirmation. There are things that you want to see. Just 3 things. There are 3 things that you want to see, and these 3 things are what you want to see. What? A church. Some people call it church. This is just a short form. The full meaning is what? Change of character. Change of character. Some persons can say it is what? Market structure shift. There are a lot of names they use in this industry, but forget the names. Understand the concept. Okay? You want to see what? A valid change of character. And a valid change of character must have what? A liquidity sweep. A liquidity what? Sweep. And it should have what? A fair value gap. I explained fair value gap in our previous class. I told you guys. Okay? It must have what? A fair value gap. So these are the 3 things that you need to see as a confirmation before you do what? You take your trade in any of these zones. Remember, they must align with what? Market structure, your bias. It is very, very what? Important. So that is that about what? Liquidity. Then inducement, I just told you about inducement, but let me tell you how it works. Let me just give you a brief illustration about how inducement works. Now let's say, for instance, follow me guys. Let's say we are having, let me use this for instance. This is a break of structure. Alright? Price continue to break structure to the upside. Okay? Now, I told you that we have every zone is what? In this bullish market, every zone is what? A demand zone where we are looking to buy. Now, if you look at very well, you see that price break structure here, goes up, fail to break this high, retrace a bit before breaking this high completely. Okay? Now, it retrace, break this high completely. Now, some persons, this is a demand zone to buy from. Now, some persons mark this mini zone as also a demand zone, and this place as also a demand zone. But when you see a structure that failed to break, it failed to take out this high, it retraces a bit, and then before it breaks, you have to be very careful, because in most cases, this area is what we call what? Inducement. Then this last area, this last demand zone is the reason. Okay, what I'm saying is that price can just actually come to this zone, do as if you want to react from it, induce more traders. When it comes to this zone, it will do as if it wants to, this zone will hold. Okay, it will do as if it's going. Imagine, have you been in a point where you're looking at the chart and price came to your zone and you see it reacting, it looks like it wants to start going, it wants to start living without you, and you'll be like, hey, it's going without me, it's going. You're emotional. It's going, out of emotion, you place trades, and then after, at a point, it starts consolidating, and then you see it coming to the stop loss and take you out. It has forced you to enter the trade when you're not actually, when you don't need to enter the trade. It has forced you, that chart, that thing that looks like it forced you to enter the trade, it is called induced. It has induced you to take a decision that's actually not correct. You took the decision because you are afraid that price might leave me behind, and you enter the trade. That is what? Inducement. So when that happens, it induces a lot of traders, and you see it coming back to the right zone before it's going. Alright? So I just, for the sake of this content, I would not want to make it so long so you don't forget some things. Maybe, I think as we are going, I will still break it down one after the other. This is just a kind of introduction to what liquidity and inducement, just for you to understand what liquidity is and what inducement is. As we proceed, I will break it down one after the other so you get the clear picture, especially when we start dealing with real charts. Okay? So that is that about what liquidity and inducement. Please guys, if there is any question so far from what I have said, do well to put it in the comment section. Alright? I take my time to go through the comment section and respond to what charts. Okay, so do well to go to the comment section and put what the question. I will come there and I will respond to you. I can even create content on those questions in our next class. Thank you very much for following me to this time. God bless you. See you in our next episode. Thank you. I love you.